Oh, okay, folks, and welcome to Short Vol Show. As you notice, I have no hair. Um, I had alluded to that previously. Let's see if we can put up a little. I put together a little montage for you regarding that event, which I shall put up here real quick, just as like a background thing here. And anyway, that's just a sort of a thing. Um, There we go. So anyway, markets appear today to be. I was just reading this article by Seth Golden where he's talking about how the markets have been really hanging on to the 200-day moving average, and that's really true. With lack of anything else to sort of follow, um, the markets look for anything to follow, and they sort of have been following this 200-day moving average. So, I'm always talking about how technicals don't really matter vis-a-vis specifically the VIX and UVXY, and I still believe that to be true. But as far as the major indices, when everybody's following technicals, then it starts to matter because the market is obviously a sum of what everybody is doing, and thus, it does matter to some extent. I uh, I also wanted to comment briefly on UVXY because um, I've had a tough time making money in UVXY, and I suspect some other people have too. And it seems the only way to make money right now in UVXY is through being short premium. Um, because any other thing you do, it doesn't seem to. Let me turn the volume down on that. Anything else you seem to do, it doesn't seem to be working out right now because we've just been kind of gripping on to 15. Now, we have been in contango a lot of the time of like 1%, and, that's eventually going to bring things down, but it's moving really slowly, not to mention the effect of having reduced leverage to 1.5 times from 2 times for UVXY, but basically just sitting still. Let's go to the. Let's take a look at the charts here for a second. Um, let's see if we can pull up another chart here. I'm going to try to leave myself in the background here, messing with my hair. And yeah, so I'll pull up a chart now. Here we go. All right, so if we look at UVXY, for example, here, let's pull that up for a second. Really just sitting in the same range it has been for some time. Not to say there aren't opportunities here in many other issues. I know a lot of people have been playing the so-called FANG stocks lately, and it seems like you really need to take advantage. If you are going to trade UVXY and want to make any money in it, you are going to have to kind of take advantage of the ebb and flow of things a little bit. And when it does, go down to when it does make a down move to, like, say 14.5, to actually make a trade, whether that be selling out some of your long puts, or buying a little bit of UVXY, or covering a little bit of your short. It's almost like you do need to actively trade. Otherwise, this tight range that it's been sitting in, and the term structure has been sort of dampening the moves and making the range tighter, because when we get a move up in the VIX, it's dampened by the term structure as stuff turns around, and it slowly starts to pull out of contango. And then on the downside, as it goes back into contango, it's dampened again. So the leverage of UVXY, you're just not seeing it, and that's due to the term structure dampening. Like I said, when you get back and forth movements on the VIX like this, the leverage of UVXY just kind of disappears. It's because it's offset by the term structure. And so people, that's when you get the people coming out and saying, oh, this is a scam and everything's a scam and all that kind of stuff. And that's due to people's frustration with this not moving as much as they think it should. Now, of course, it's not a scam and it's working the way it was set up to work. It's just that you need to follow the term structure and see what's actually going on with the VIX and the futures, because as we know, UVXY is based on the futures. Now, I was commenting earlier on the, let's see if I can get myself back up in the picture here a little bit. There we go. I was commenting earlier on the, see, no hair? I wonder if it will come back or if I'm just going to be an egghead for the rest of my life. The futures are in contango right now. However, the VIX spot is way below both futures. So the question is, what does this all mean for, edge and leverage the downside to the upside? And I would argue that as long as the spot is below both futures, even though the two are slightly in contango right now, like for example, right now the M1 is 1687 and M2 is 1675. So it's like 12 cents in backwardation. However, as long as you have spot below, spot's like 50 cents below everything. As long as you have spot below everything, the pressure really is pulling downward, because both those futures eventually need to head to converge with the VIX. So the VIX either needs to come up to it or the futures need to go down. But either way, there's pulling down. So I wouldn't, it's the effects of contango / backwardation at this point are really, it's not even worth talking about. We've already spent too much time on it. And, as long as you're within like 1%, 2% either way, it doesn't really affect things that much. And, if you want to go along the VIX, then you should feel like there's not that much drag pulling down on TVIX or UVXY right now. So if you want to get long volatility, UVXY is a better choice than it would be when we're in contango. Sorry, I just kicked the table. That's why it kind of shook there for a second. But, at this point, I would suggest to people that there are better opportunities out there than trading the VIX for making money right now, because we're just kind of in like no man's land right now. And in fact, if there's going to be a big move, which this is often true, but if there's going to be a big move, it's probably going to be to the upside in the VIX right now. But medium moves are just going to be absorbed by the term structure. I mean, right now, like for example, right now with the VIX at 1611, okay, and the front month 1695. So that means the VIX has to go up another 80 cents just to be even with futures, and then to start really bringing futures a lot higher, it needs to go up more. So there is definitely still, UVXY is not going to, it's going to underperform to the upside right now for a move up in the VIX, just due to the fact that spot is way below the futures. So, the VIX really hasn't been the place to make money for a while now, since February, and it still isn't the place to make money. So I would suggest to people that their positions should be small at this level. We used to talk about, as a market maker trading volatility, that when vol is in a mid-range, you want to be kind of small, and if vol gets way extended to the upside, then you want to be short it, and if it gets way extended to the downside, then you want to be long it. And I would say that applies to this situation here. So if you look at the VIX around 16, that's mid-range. That's mid-range no matter, for this year, that's mid-range long-term, and that's mid-range pretty much in almost any situation. Now, that wouldn't have been mid-range last year. Last year at this time, if you get VIX 16, it's a huge sell. But in this time, in this situation, it's very mid-range. And, some people would have argued even last year that, not to lay both hands into the VIX if it gets to 16. But of course, that would have been proven to be untrue, because VIX popping to last summer, VIX popping to like 14 was a huge sell. It got to 14, it was going to go right back down to 10 within a day or two. So, but historically speaking, right now we're in a mid range. So this is not a time when you would want to lay into any position really big in the VIX, and I would look elsewhere for my opportunities for making money trading. Now, that's kind of you might think that that's a silly thing for me to say, having a show on the VIX and being focused on the VIX, that you should look elsewhere for money-making opportunities. But, I want to be honest with you. I don't want to steer you in the wrong direction there. We have had, I want to give an update on marijuana stocks and MJ stuff. I haven't really focused that much on MJ stocks lately because, well, one of the reasons is YouTube demonetizes if you mention MJ or you put the M word in a title for a video, they demonetize you. So there's not that I make a lot of money off of YouTube monetization, but there's a real incentive not to talk about marijuana stocks because YouTube will not pay you for videos that have anything to do with that. And so it kind of defeats the purpose of, well, not defeats, but it's legal, but you can't make money on it on YouTube. But I still want to talk about it. There is Trudeau in Canada has come out, and they have said in the government there that there's a possibility that legalization will be delayed for up to another year for marijuana stocks. And the reason behind that has to do with the indigenous peoples in Canada, and essentially they're trying to sort out issues to do with the indigenous peoples, and before they address the marijuana issue. And I think that it's kind of like casinos are in the United States, where like indigenous peoples kind of want to get involved with the MJ stuff. And the situation now is that all these companies have ramped up getting ready for this recreational MJ that was supposed to happen this July. And they're finding all of a sudden that they have, which is shocking because we were talking about the opposite recently, but they're finding out that they have excess capacity to produce weed in Canada just for medical. And so, if you look at some of these stocks, they've been punished, and they're way off the highs. The highs were last December, but if I pull up APHQF here for a second, let me make my bald head a little bit smaller here. Put me over here somewhere. Okay, so if I pull up this is Afria, which is one of the big three in Canada. And here's a story. And interestingly, I did buy it around here, around the $5 mark, and I bought it actually. You can right where I'm pointing here with a pointer, where it was like, actually I bought it right around here, so it went up from 5 to like 6 and change, and then it gapped down. And I was in the losing column for a while, but then I was able to participate in some of these moves. I did sell it here somewhere, and I did buy it back around here, and I did sell it up around the highs, and I haven't bought it since then. But I had some great luck with this, and I will call it luck because I'm not usually good at trading stocks. But this is the story, and with many MJ stocks, this huge rally up into December, and then just a huge sell-off. And I think that there's some buying opportunities in these. Let's take a look at another one. This is Canopy Growth. Now, not as much of a sell-off in this one, but a similar story in that it is off its highs. And then ACB, similar charts, and it's still a volatile place to be. I did talk about how my buddy Dan McDermott from Chart Guys Dan was saying how this will make many millionaires, and everybody was fully expecting that this was the summer that this event was going to occur, but is a volatile space, and but I do want to point you to marijuanaindex.com, because that's a great spot for to check out, and I will put it up here for a second. And this gives a chart of the all the North American MJ stocks, and then divides it up among Canada and the United States. And similar charts. You'll notice that the chart of the index mirrors a lot of these individual charts, as all these are affected by many of these legal issues. We know that the Jeff Sessions and the Trump administration are not friendly to MJ stocks in the U.S., and a lot of these companies that are Canadian have tried to they first of all tried to add to their positions and get exposure to the U.S. market, but then they kind of switched that around a few months ago and tried to get out of exposure to the U.S. market because of fear of the federal government cracking down. Legalization in the United States has been a mixed bag, where several states have legalized, but it's still illegal federally. And so, there's even concern among investors that if you own stocks that have this sort of stocks in the U.S., that it could be deemed illegal to even own them. But so it's a risky proposition, but one in which there is a chance to make big amounts of money, and they are way off the highs right now. So potentially not a bad place to be buying some of them. State to state, the rules vary a lot. I'm in Massachusetts right now, and where the public has voted to legalize, but town by town, many people are trying to block it or to slow it down. In my town of Orleans, the same thing's happening. They're trying to kind of block it from town. People, there's a lot of misinformation, for one thing. For another thing, it is seen as a gateway drug, and so the feeling among a lot of people is, they don't want a dispensary in their town. Now, the flip side of that is that there's money to be made in this, and there's a new program on public access in our area on the radio that discusses and gives information on what's going on with legalization every week. I used to be a big proponent of this stuff, but I've been sober for many years, and I just keep quiet on it generally. But there are, at some point this stuff is going to turn around, these graphs, and they are going to, I believe, make new highs. So it's something to monitor, and it's something that I find interesting, at least. So as we approach the open, let's go back and take a look at the VIX and term structure in a little bit more detail. Okay, so here's the VIX over the last year, and you can see that big spike, and it seems to be kind of like consolidating here. If we do look at the VVIX now 91. Here's a chart of the VVIX, and that's really settled down. Now, that could indicate that that we're going to stick around this area of the VIX of, say, 14 to 17 for a while. And so that kind of leads me back to the thought that maybe being short options just being sort of short straddles and UVXY with a little bit of a short delta is probably the only winning position. Owning premium has not worked out, and I can tell you firsthand it's not worked out. And if we look at UVXY, we have been sitting around this 15 mark for an amazing amount of time, considering a decaying product. I mean, you could have sold the 15 straddle in January and just hung out, and we're right there. Now, this can't continue mathematically. Things, it has to break lower at some point, just due to the forces that be of contango. But it has worked out being short this 15 straddle. Maybe, get short the 12 straddle and just hang out, and eventually it will go to 12. I can't guarantee it, but that is my belief. Once again, I am not a financial advisor, so I'm not authorized to advise people, but I'm just giving this as educational information. So let's go to the term structure for a sec, folks. And I'm going to use VIX Central, which is one of my favorites. I still haven't got Eli to come on the program, but hopefully soon. Okay, and here we go. We are slightly in backwardation, but as I said before, I really think that's meaningless for our purposes because, first of all, let me move myself over here for a second. First of all, it's offset by the, there we go. It's offset by the fact that spot is below all the futures, and also it's such a minor amount, 0.24% as we look at it now. Remember that this chart is delayed by about 30 minutes. So we did see the VIX spike up yesterday over 18 and come back down. It was another one of those sort of comeback days in the market that we see so many of. Contango has been there, but 1-2%, it's going to have a negligible effect. But eventually things are going to get pulled lower in this. So that's where we stand as far as the term structure. VXST, which is the front month volatility, has been fairly, pretty much similar to the front month future, which would be expected. But the question for the market is, what's the next catalyst? What do we look ahead for now that earnings have come out and earnings have been good? But what are we looking for now to make us move higher or lower? And in my hypothesis is usually that in the absence of anything else, we slowly move higher just because of there's people always putting money into the market from their 401ks, etc. There's more people in the world at all times, and we slowly move higher. So, the political, there's been much talk about the political situation in the United States and political instability or stability, and there's been much talk about the midterm elections. But, things are kind of split among party lines as usual, and using that political stuff to direct your trades is not advisable from my point of view, at least. So now we have markets down and gold has turned negative. Let's take a look at gold for a second. I want to point you back to an interview I did a few weeks ago with Nick Mastrandrea, who is on barcharts.com a lot, and also has his own website called Market Tea Leaves. He comes on every morning at about 4:30 usually, and he talks about correlations. So, for example, in a correlated market, when the equities are up, gold will usually be down. And if that doesn't happen, then we're not in a correlated market. So right now, so for example, this morning's briefing, he says the dollar is up and crude is down, which is normal, and the 30-year bond is trading higher. The S&P is lower and crude is trading lower, which is not correlated. So, usually when the S&P is lower, crude would be higher. And gold is trading down with the dollar up. He says, I tend to believe that gold has an inverse relationship with the U.S. dollar, as when the U.S. dollar is down, gold tends to rise in value and vice versa. Think of a seesaw when one is up and the other is down. I point this out to make you aware that when we don't have a correlated market, it means something is wrong. As traders, you need to be aware of this and proceed with your eyes wide open. I would recommend checking out Nick's insights on barchart.com or go to his website, Market Tea Leaves, because he also has a lot of the timings for different market events. So, for example, lower in this article, you can see he has what time stuff's coming out today. So, for example, today, average hourly earnings out at 8:30, non-farm payroll, non-farm employment change 8:30, unemployment rates 8:30. And he tells whether these things are major or minor. FOMC member Dudley speaks at 12 noon. This is major. FOMC member Williams speaks at 3 p.m. This is major. So this is checking out what Nick has to say every morning can be a great little key to, or it's just another tool in your toolbox to try to figure out what's going on in the market. And I would highly recommend checking that out. Somebody was asking me recently where I get my information on as far as a calendar of sort of earnings and this sort of thing. I would also recommend Bloomberg.com to check out the calendar. There are several resources on Thinkorswim. Thinkorswim, which I have behind me right now, is a very, very powerful tool. And there are videos online on YouTube that will help you learn how to use it better, and I would definitely recommend checking them out. And Thinkorswim is actually a free platform, so even if you don't plan on using TD Ameritrade as your broker, you can still get Thinkorswim and use it. And I would definitely recommend that. Several people will use Thinkorswim and then execute with another platform possibly. Now, my feeling is that if TD Ameritrade is providing this service, then you should try to kick back to them a little bit by maybe using them for some trades at least. And that's what I do. I've had a great relationship with TD Ameritrade, and I've been able to negotiate better rates for myself. And for a little while, I went away from them because I got better rates from another company, and they were able. And I said, I will come back if you lower rates, and they lowered the rates, so I did come back. That's my story on them. If you want more information on how to negotiate with them, you could contact me or leave a comment down below, and I can get back to you on that. So, the our earnings a couple weeks are almost over, and as we head into the summer, we have, been sort of back in contango, and at least the VIX spot has been below the futures at the end of the day most of the time now. If things kind of stay around where they are right now, I would anticipate us going back into contango by the end of the day today. Yesterday was, it got marked out as completely flat after the close as far as contango / backwardation. But generally, it all depends on how far we are to expiration in the futures. And the fastest way I always like to check to see how far we are away from expiration and refresh my memory on these kind of things is to go for me to the ProShares website. So let's pull that up real quickly here. I like to go to the ProShares website, and let me minimize my picture for a second here and look at And what I do is I just type UVXY into the Google search engine, and I pull up the ProShares website. And then I go to daily holdings here. And this, it's going to tell you when the futures expire. So 5/16, the next futures expire. So if we look on the calendar, today is the 4th. So we're about halfway through. Little over halfway through expiration cycle. So that means that futures are about evenly distributed now. Now, when you look at these holdings here, you can assume that these swaps are acting exactly the way futures would be. They're in the end, they're balancing everything. Now, when we look at how the ratio of these two futures here, one has 17,000 and one has 11,000. That seems like the right ratio if these swaps didn't exist. So now these swaps could either be actually acting like specific futures, or they could be simulating the roll every day exactly. And they use these to save money. Basically, there's less margin requirements on these futures, and so I would not be concerned about these. They've been around. They use them all the time. I would just look at these two futures when we're looking at this, and this is the M1 is the 5/16 one, M2 is the 6/20 one, and you can see UVXY holds cash. It usually holds between somewhere around 300 to 400 million in cash, and that's normal too for this ETF. So when I look here, it reminds me that we're in the middle of the expiration cycle right now, and therefore each future is contributing to UVXY about equally. So you've got one that's up 37 cents and one that's up 27 cents. So that's an average of like 31 cents. So in my mind, I could think 31 cents times 1.5, which would be like 40 cents, up 40 cents. Now UVXY right now, before the open, only up like 20 cents. Now the reason for the discrepancy is essentially marks, because some places mark UVXY on the close at 4, whereas the futures actually close at after 4:15 at some point when they get marked, and so there's discrepancies all the time. So it's going to be off a lot of times by 20, 30 cents, depending on what happened between 4 and 4:15 every day. So don't let that confuse you too much. I know it's a little bit confusing that, you say, well, if these futures are up an average of 30, 32, 33 cents, then why isn't UVXY up 60 cents, 1.5 times whatever the futures are? Well, that's due to yesterday's marks, and it all works out in the end. If it's only up 20 cents today, that means that it got marked a little high yesterday in UVXY, and it will come back into line. It all evens out in the end, but it can be a little bit confusing sometimes. But essentially, UVXY will be when you look at how much these futures are up each day, you can figure out what the average is between them of how much each one contributes, and then you can multiply that by 1.5 times to figure out its effect on UVXY. So now with a small move like this around, and that's what UVXY is based on entirely, is these two futures. It's not based on the VIX whatsoever. So don't get confused about that. But once again, the reason that UVXY is up less than these futures right now, even though it's a 1.5 times leveraged product, is because of marks of the marks from yesterday. So UVXY gets marked at 4 o'clock. The futures get marked at 4:15, and that discrepancy is what causes this. What seems like it's not correlating exactly. Okay, so coming into the open today, coming into Friday, we'll have to see what happens moving forward. We've got 8 minutes till the open, and I am going to let you go so that you can get on with your day and with the open. I really appreciate you tuning in. It would be great if you could contribute to Patreon to help me in my quest to becoming a bigger person in online as far as audience. Not that I'm trying to get physically bigger or something like that. I will be seeing you shortly, and we do have some good interviews coming up very soon for you. I am going to leave you once again with my haircut video because I think it's funny, and I will put that up right now for the outro.
Right, but I'm looking at here, so it's higher. I think. Is that better?